Large automaker it was in talks with for a potential transaction has terminated negotiations.
Now, this is essentially a lifeline thrown out to Lucid in a very vulnerable time, not just for Lucid, but for the entire EV complex.
Increasingly, people are moving towards hybrids, EVs, and increasing technology.
The entire EV space is hurting. Tesla in particular is hurting.
There's been a sort of assumption that Tesla has been making its own batteries, which isn't exactly right.
All that and more. So let's get to it. Tesla stock is up in the pre-market over 3%, sitting at 178.14. Something must have happened to Tesla that has the stock market frothing at the mouth. I'm sure this has nothing to do with it.
Watching shares of Fisker, they're plummeting this morning after the EV startup says the large automaker it was in talks with for a potential transaction has terminated negotiations. Fisker now weighing strategic alternatives, including in or out of court restructurings here. Shares are down 28%. The company has already been going through a massive restructuring of its own business and trying to make sure that they can cozy up to some potential dealers and growing out the dealer network as well. So kind of stepping away from the pure D2C that a lot of, and really spurred by how well Tesla had been able to do in that.
Not as easy as Tesla makes it look.
Moving away from that and now going directly to, okay, what are the distribution partners and channels that we can work with at the dealer model perspective, and if that doesn't help them, you got a question here. Number one, how much longer are we looking at Fisker as a publicly traded company? That is an issue, and any mechanisms that they will need to employ in order to just remain within listing compliance as well. And then two, what sales look like in this near term. I love the names of the vehicles though. Ocean, I mean, how could you not like that?
It's going to take more than some well-placed names to keep this company afloat. It would appear there will be no knight in shining armor that is coming to save Fisker. Quite sad, really, but we know there will be a culling when it comes to battery electric vehicles. Either you're going to make them and make them well, profitably, or you will follow a path similar to Fisker, no matter how much money you may get.
Lucid shares up this morning. Bernina Young has got the story on the beaten down EV maker. What's up, Bernina?
Well, they got an investment from their largest shareholder of $1 billion.
Damn!
The shareholder is an affiliate of the Public Investment Fund, and they purchased $1 billion worth of the newly created convertible preferred stock through a private placement. And the proceeds of that will go toward general corporate purposes. That'll include capital expenditures as well as working capital. Now, this is essentially a lifeline thrown out to Lucid in a very vulnerable time, not just for Lucid, but for the entire EV complex. We heard about what's happening with Tesla last week, as well as some of its other peers. But when we look at Lucid, it alone has dropped somewhere around 60% or so over the past 12 months, maybe a little bit more by now. And its most recent quarterly report, Oliver, it showed a 39% drop in sales for the fourth quarter, and also a wider loss from the same quarter last year. But the company, needless to say, is excited about this infusion.
Not a whole lot else to be excited about. I imagine your top investor losing a lot of money. Some might look at that as a bad thing.
Every dollar counts right now. Shares
Absolutely.
now back up to $3. Lucid now.
Ooh.
Yeah, it's gotten just really wrecked over the past year.
Yeah, unfortunately.
$9, 52 weeks ago.
Yeah.
$60 back at the high. It's crazy.
I know.
All right.
Mizuho downgrading multiple EV stocks, Tesla, Rivian, and NIO, all now rated neutral despite expecting long-term gains. Analysts warning demand, increasing inventories, and liquidity issues are creating challenges into the next year. They've sort of highlighted these companies separately, but really there is the overall theme that we've been talking a lot about, which is that yes, EVs adoptions are still growing, but not at the rate where it has been.
Yep.
You look at where they expect it to be. EV growth now expected to be 15% year on year. That's compared to 25% where it was before. So yes, 15% not so bad, but when you compare it at how quickly it's grown, certainly not good news for those companies.
They can't do it all by themselves. Many of those figures with the expectation that people would buy those less than desirable U.S. legacy auto manufacturer vehicles. That simply wasn't the case, and you have the likes of Ford, GM, and anybody else not making any money off of battery electric vehicles pulling back, so to speak. The consumer doesn't want these, and that is true, but not for the reasons that they think.
And then when you think about what's been playing out in a market like China, the price cut war, obviously we've seen that in the U.S. as well, but that's going to continue to weigh on margins for these companies.
Yeah, and specific on Tesla, they said, listen, Tesla remains the global leader, no doubt, but then they just rattled off this list of worries they have, Akiko: moderating growth, China competition, you mentioned higher inventory. Stock's already been shelled. It's down about 30% this year, but they clearly think not all the bad news is priced in.
Yeah, and you have to wonder, a name like Tesla, I mean, certainly that is the EV player that investors have been going to, but there is increasing competition. At the same time, we have seen more and more challenges with names like Rivian, the upstarts, the other EVs that are, look, they have the cars out there, but they don't have the runway right now. And there's questions about whether, in fact, they can continue to grow with the cash they have on hand.
Industry-leading margins, that's a whole lot to play with. And if you're just looking in the EV space, it may look like there's a price war. But if you look around, many people are still driving internal combustion engines. Lowering the price does wonders for opening up your total addressable market to convince those internal combustion engine consumers to finally go electric. Now, there are a multitude of reasons why an individual might not want to make the transition, especially for an inferior product. Luckily, Tesla doesn't have that problem. These other auto manufacturers, not so much.
Mizuho does have some names they still like, by the way. They still, maybe they got a kind of lukewarm on a few EV makers. They did say they still like GM. That's a buy. Their target's 48.
But it goes back to the legacy names that are continuing to sort of be in favor of a lot of these analysts when you think about where the short-term trajectory is, at least for EVs.
For sure.
And that should tell you everything you need to know about the auto analyst at Mizuho. Very short-term thinking. I mean, if GM doesn't get their act together, they're definitely not going to be selling battery electric vehicles in the next decade. Instead of going gangbusters on battery electric vehicles, they are dialing back in favor of what they do best, the internal combustion engine, which is dying. The internal combustion sales, they may look good now, but there is something festering inside. A cancer, if you will. Now, all of these U.S. legacy automotive manufacturers know they have this illness. An illness that will one day sink their entire business. Not building or progressing in the manufacturing of battery electric vehicles is like refusing to take the medication for that cancer. Yet Mizuho feels like there should be a buy rating on this infected car maker. I tell you, up is down and down is up.
We have to begin in China. I want to talk about what's happening there, what's behind the slowdown. What's your read on what is developing there, and are things picking up as we kick off 24?
Well, China remains a really critical market in automotive. It's the biggest market in the world. It's about 50% bigger than the US vehicle market. And General Motors have enjoyed great success over a long period of time, and Buick in particular has been General Motors' lead brand there. We're still delivering over 500,000 vehicle sales per year there, and it really does remain a critical market for us.
Enter the only competition for the battery electric vehicle, the internal combustion engine. That's a lot of cars. For now, but battery electric vehicles are the future. What's going to happen to the sales of those Buicks 3 years from now? 5 years from now?
What does the consumer want? Do you see a shift to domestic brands? What are you up against?
Clearly, the situation has changed. Domestic brands have become a lot stronger, but Buick does remain strong there. And increasingly, people are moving towards hybrids, EVs, and increasing technology.
How difficult is it, though, on the price war kind of front to really compete and also make a profit?
Well, the price sensitivity over there is great. And again, there's about 250 brands on sale in China. There's about 50 here in the US. So you can imagine the competitive situation is very difficult. However, Buick remains very, very strong. We've got the great lineup, the lineup that we sell here in the United States, increasingly introducing EVs and PHEVs as well, hybrid electric vehicles. And again, we feel well placed to compete going forward.
I sure hope so.
When you talk about here, I am wondering whether that's also been a challenge just because the electric vehicle demand hasn't been as great. There was a recent report in Cox Automotive that Buick inventory levels in particular so far this year have been a lot higher than other types of cars, even within General Motors. Do you think that that's a reflection of the lack of appetite for electric vehicles in the U.S.?
Well, we're not actually selling electric vehicles within the Buick brand in the US yet. What we're doing, we've launched 2 brand new vehicles last year. We're launching 2 brand new vehicles in the first half of this year. By the middle of this year, we'll have what we expect to be the freshest portfolio of any brand in the industry.
Bullshit! Sorry, I must be allergic to something.
And the customers are really responding to it. It's a new design language, a new logo, and again, these totally fresh new products.
Bullshit!
We have Tesla, it's down more than 30% this year. Where do you feel it's headed?
I think it's going to continue to go lower. I am bearish on Tesla. We'll lay out the trade in a little bit. One thing about the technicals, it's making lower highs and lower lows. I'll let Ben get into those technicals later on. So let's focus on the fundamentals. Forward PE for what is essentially an automaker, even though we love it. We don't treat it like an automaker, but forward PE of 55. It's now fallen out of the top 10 biggest names in the S&P. In fact, it's number 12 now. The entire EV space is hurting. Tesla in particular is hurting. And so I am bearish. Now, I don't want to sell it short because it's a name that could really rip higher if there's some news coming out.
Lower highs, lower lows. You can't blame the short-term thinker for following the trend until the trend proves to be inexhaustible and Tesla shoots up 15% for some reason. On some news that people should already know what's coming down the pipeline for Tesla. Short term, I can't blame you. It's a lot of negative sentiment in the news media about battery electric vehicles. Tesla themselves have said 2024 should be of lower growth, especially when you're talking about the automotive sector. But if you're just looking surface level and trying to make a trade within the next week, month or so, this advice may be sound. Unless Tesla reveals something of a ChatGPT moment, the broader stock market realizes that Tesla is one of the best AI plays known to man. If you have an investment time horizon longer than the length of your nose, you should not only be holding Tesla, you should be hoarding Tesla. At least that's what I'm doing. My investment time horizon? Little over a decade. Every dollar that I put in today, I don't even think about that money. It's gone. It's gone. Until about 10 years from now, I'll come back and look at it and be like, yes, I'm so glad I dropped that money in the middle of the 20s. And for anybody thinking that it's too late to invest in Tesla, we're not even in the first inning of Tesla's growth story. Hell, the vocalist that's singing the national anthem hasn't even started warming up yet.
Billionaire chairman of the world's biggest battery maker says the company is working on faster charging batteries for Tesla as the automaker tries to defend its market share and roll out a car for under $25,000. Now, in a wide-ranging interview, Robin Zhang, the chairman of the Chinese battery giant CATL, also told Bloomberg that the company is on track to license its technology to Ford at a plant in Michigan. Now, the project has attracted scrutiny and criticism from Republican lawmakers. Well, talk to us a little about what CATL is. So it's not seen as that friendly to, I guess, U.S. interests. So why is Tesla so close to it?
Yeah, I think CATL has become a sort of boogeyman in Washington where, Ford was trying to do this licensing deal where they would own the plant outright. They would essentially use equipment and technology from CATL, but they would own everything and control everything, and even that was not enough. And it became so politicized that you even had, the governor of Virginia referred to CATL as a Trojan horse, really sort of charged language. I think what's interesting to me from this interview is this idea of just how close the chairman of CATL is with Elon Musk. And so while Ford has gotten a lot of heat in Washington for how close it is to CATL, it's not even nearly as close as Tesla has been with CATL.
Battery makers like CATL, Panasonic, they're producing batteries at the highest volumes that they ever seen before. Main reason is companies like Tesla saying you can't make enough batteries, we'll take them all. Why? Because that's what it's going to take for Tesla to reach their goal of 20 million vehicles per year. Did I forget to mention that they have a burgeoning stationary battery business that they're also implementing? Megapack, Powerwall. In your wildest dreams, you can't possibly make enough batteries. With that comes innovation and economies of scale. Not only will these batteries become more efficient, they're also going to become a heck of a lot cheaper at this rate of production.
But is that because Tesla also has gigafactories in China? So, and can they keep them separate?
I think it speaks to this idea as well of a sort of misunderstanding. There's been a sort of assumption that Tesla has been making its own batteries, which isn't exactly right.
It isn't?
They've always relied on Panasonic in Nevada. They're highly reliant on CATL in China.
Oh dear God, that's frustrating. Tesla does make their own batteries, but there is no way in hell that they could reach their goals if they were just making the batteries themselves. This is the definition of what a partnership is. Tesla will take high quality batteries from anyone that's willing to make them. That's what happens when you have a vision so grand as making 20 million vehicles per year, and when you have ambitions for your energy division to grow faster than your automobile side. Needless to say, that's a lot of batteries. In conclusion, Fisker on life support. Will Lucid follow suit? I mean, if you listen to Mizuho, all of the pure play EV makers aren't looking so hot, especially in the short term. Take that with a grain of salt because they have a buy rating on GM. Global Vice President for Buick and GMC talk China and GM's general sales strategy about flexibility, pivoting from hybrid to EV to internal combustion, whatever the consumer needs, GM will be there to offer it. No matter how lackluster the product, you can get something with a GM logo on it. TSLA has a stock chart that bears just absolutely love. Many analysts won't touch TSLA with a 10-foot pole. I suppose that's good for me as I continue to stock up on TSLA at these discounts. Meanwhile, CATL is working on fast charging battery cells for Tesla. Much like the form factor 4680 being pushed onto Panasonic, CATL, make these and we will buy them in large quantities. These fast charging cells, what are the odds that Tesla, much like the 4680s, is imposing this on CATL? Either way, if you're making batteries, Tesla wants them. That's all I got for you today. Be easy. Peace.